Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. In today's video, we're going to talk about how you can increase your Capital One credit limit up to 3 times your current limit within a 60-day time frame. Now, I know that sounds bold because a lot of people watching this right now probably have a Capital One card that has been sitting at the same limit for years. You may have started with a $300 limit or a $500 limit or maybe even a $1,000 limit. And no matter how much your credit score has improved, Capital One would just not increase your limit. And that's exactly why I wanted to make this video. Now, this topic actually came up during a one-on-one coaching conversation that I had with someone last year. They had a Capital One card and their credit score was around a 750. But their Capital One card was still stuck at a low limit, and every time they asked for an increase, they either got denied or Capital One would offer them something like $100. And I was in this same situation myself a few years ago, but I learned exactly what was keeping my limit low and how I could actually get around this issue. So fast forward a little bit, I received an email from this individual and they reached out like a week or so later after our initial conversation, and they let me know that they were approved for a Capital One Venture X card with a $30,000 limit. And I thought that was amazing. So I made my initial video covering this subject to share that explanation, and I want to update that with you guys today. So without further ado, let's get right into the video. Now, before we get into the explanation and then our strategy, I want to say something that might surprise a lot of people. Now, Capital One is not a bad financial institution. I know that might sound crazy if you've been stuck at a low limit with Capital One for 5 years, but Capital One is actually one of the most important banks to understand when you're trying to build or rebuild your credit. See, a majority of people start their credit journey with Capital One when other banks won't lend to them. And here's why. As of early 2026, Capital One is a major U.S. bank with approximately $650 billion to $670 billion in total assets. Generally, they're ranked as the 6th largest bank by asset, but of course, this fluctuates year by year. But not only that, Capital One is widely considered the largest issuer of credit cards to subprime consumers in the U.S., and that's before its acquisition with Discover. So basically what I'm saying is that if you're new to credit or you're rebuilding credit after, let's say, a collection, a charge off, if you're coming back from late payments or trying to establish yourself after some financial mistake, Capital One is often the first major bank that will still approve you. That's the reason why so many people have Capital One cards in their wallet. However, because Capital One works with so many different credit profiles, people often misunderstand how their system works. They think Capital One is just conservative, and that is a misconception. Your credit score today is very important, but with Capital One, your credit score at the time you originally applied can still impact how that specific card is treated years later. And that's even if you've gone from bad credit to fair credit to excellent credit. And that brings us to the Capital One bucket system. Now, some of you may have heard me speak about this from my previous video, or if you're a new viewer, you may be hearing about this for the very first time. Capital One has what's called a bucket system, and this means that Capital One may place your account into a certain category based on your credit profile at the time that you had originally applied for one of their cards. That category can affect how much your limit can grow over time. For example, let's say that you applied for a Capital One card while you were rebuilding your credit and your score was around, let's say, like a 580. At that time, Capital One may have approved you, but they would have placed your card into a lower limit or high risk category. Now, let's say that 1 year later, you improve your credit score to a 750. You have perfect payment history, your income is better, utilization is low, and you've had a solid relationship with Capital One. Even with all that improvement, Capital One will still treat your original card like it belongs in the same category that it was placed in when you first got approved. That is why some people can have great credit and still get denied for a Capital One credit limit increase. Or instead of getting a meaningful increase, they may only receive something small like $100. Now, let's go over to the Capital One website so I can give you an example of exactly what I'm referring to. So currently we are on CapitalOne.com. I'm going to go over to their credit cards, and then let's just do the credit card overview. We're going to click on this option here. Now, depending on the time that you're watching this video, this layout could change, but for the most part, Capital One has always kept up with these same categories. Now, you can filter by card, but we don't want to do that. Let's just take a look at the cards that are currently being featured right now. So as you can see right here, they have the Platinum card. This card is for fair credit. You can see the category here. There's also a Capital One Venture card for excellent credit, and then you have a Quicksilver for excellent credit. That seems normal, right? But if you keep scrolling down, you'll start to notice, okay, they also have things like Venture X for excellent credit. Then they have things like the Venture One for good credit. Then they have things like the Venture One Rewards for excellent credit. Then you have the Quicksilver for excellent credit. Then we have a Quicksilver once again for good credit. Then we have the Saver One for excellent credit, the Saver One for good credit. And then we also have the Saver One for fair credit, the Quicksilver for fair credit. And you kind of see like so on and so forth. There's always different levels to all of these cards. Now, just think about this logically for 1 second. If we have this same Quicksilver card, why do we need to have multiple iterations of the same card? Why would you need to do that? It doesn't make sense, right? And then if we keep scrolling down, we'll see the same thing happening with multiple cards. And you'll notice that there are some cards that never actually get into that phase of being fair. Like, for example, you won't see the Venture X there, and you may not see the Venture Rewards. At worst, you may see the Venture One, right, for good credit, but you'll never see certain cards in that lower tier. Then you have things like, let's say, the Platinum Secure card, and they call that the Rebuilding Credit card. Now, if you were to have a Capital One Platinum Secure card that was in the rebuilding phase, and that's where you started, chances are, even if you, let's say, didn't upgrade to this card to a Quicksilver, this card probably will not get a high credit limit. All right, so now let's talk about what actually happens when your Capital One card gets bucketed. So once you're approved for a Capital One credit card, that specific card may be placed into a certain internal category like we just saw. And that bucket will influence how high your credit limit is able to grow on that particular card. In other words, that card will have a ceiling. So for example, if you start with the Capital One Quicksilver card while your credit is in the rebuilding phase, like the secured version, or even if you started with the Capital One Fair credit card, they may not have the same long-term growth potential as someone who applied with excellent credit. And that's why if your card was approved while in that lower tier, you may find that your limit never grows past a certain point. Maybe it stays under 3,000, maybe it even gets stuck around 5,000, or maybe you'll only receive a small credit limit increase like $100 or $200 even after years of on-time payments. On the other hand, if someone applies for Capital One with excellent credit, stronger income, low utilization, and a clean credit profile, then they may be approved for a much higher starting limit. That same person may also have more room for larger credit limit increases in the future. And that's why two people can have the exact same Capital One card, but have completely different limits and completely different experiences. Now, let's say that you're curious about where you stand with Capital One today. Well, as we saw on the website, Capital One separates everything by credit level, and you'll usually see categories like excellent, good, fair, or rebuilding. Let's say you go through the Capital One pre-approval tool on their website, and Capital One shows you cards in the excellent category. That usually means that you have access to their better products and potentially higher starting limits. This is where you may see cards like the Venture X, the Venture One, the Quicksilver for excellent credit, and the Saver Rewards card for excellent credit. If you're pre-approved for cards in the good category, then you may still have decent options, but the starting limits will not be as high as someone in the excellent category. You may see good credit versions of cards like the Venture One, the Quicksilver, or the Saver One. But once you move down to the fair credit category, then the options begin to change. You'll no longer see premium travel cards like the Venture X or the Venture, and instead you may see cards like the Capital One Platinum MasterCard, the Quicksilver One, or the Saver One for fair credit. Then if you're in the rebuilding category, your options are usually much more limited, and you may see only the secured cards like the Platinum Secured or the Quicksilver Secured. This is why the card you're pre-approved for can give you a clue about where Capital One currently sees your credit profile today. If you're rebuilding, your starting limit may be somewhere around $200 to $500. If you're in the fair credit range, maybe you'll start around $1,000 to $1,500. Now, if you're in the good credit range, you may start closer to, let's say, $3,000 to $5,000. And if you have excellent credit, especially on higher tier cards like the Venture X, you may see much larger starting limits, sometimes around $10,000, $20,000, $30,000, or even more than that, depending on your profile. The main point is this: with Capital One, where you start can heavily influence how far that specific card can grow. So if you started with Capital One while rebuilding your credit, that card may always be treated like a rebuilding card. But if you apply later with a much stronger credit profile, you may qualify for a better version of that card or a completely different Capital One product with a much higher limit. Now, the question most people have is, why does Capital One even use this system in the first place? I believe understanding the why of something helps you overcome any obstacle. And the reason why Capital One has these bucketing systems really comes down to how credit card debt can be packed, structured, and used inside the financial system. Capital One has something called COMET, which stands for Capital One Multi-Asset Execution Trust. Some people refer to this as a MAT or a multi-asset trust. Now, this is connected to something called an asset-backed security, also known as an ABS. Now, if you have no idea what an asset-backed security is, I'm going to break this down in very simple terms. An asset-backed security is a financial investment that can be backed by a pool of assets. Now, these assets usually produce cash flow from debt, and that could include loans, leases, credit card balances, receivables, or other forms of money that people owe and are expected to pay back over time. So again, here is the simple version. Banks make money when you use credit cards. Every time you swipe, tap, or use your card online, the bank can earn money through interchange fees. Now, the more you use the card, the more potential revenue that institution can generate. But it goes even deeper than that. Those credit card balances and receivables can also be grouped together and used as part of a financial security. So investors can make money from the cash flow that's connected to that debt. But not every borrower has the same risk level. Those accounts can be separated and evaluated based on risk. And that is where the credit card tiers come into play. If this sounds familiar and you guys watch the movie The Big Short, then you're probably familiar with exactly what I'm talking about as far as these asset-backed securities. Now, to bring it back to Capital One, if Capital One views you as a high-risk borrower, meaning they believe that there's a greater chance that you might default, they are not going to give you a massive credit limit. They're going to limit their exposure. And that's why some people get stuck with lower limits, smaller increases, or cards that seem like they refuse to grow. On the other hand, if someone has excellent credit, strong income, low utilization, and a clean payment history, Capital One may see that person as a much lower risk. That person is more likely to use the card, spend more money, and pay it back on time. And from the bank's perspective, that is a profitable customer. So people with stronger credit profiles may receive higher starting limits and larger credit line increases because the bank believes they can handle more available credit without defaulting. So just think about it like this. Your credit card is not just a piece of plastic sitting in your wallet. It's part of a much bigger financial machine. And credit card companies make money from your spending, your balances, your interest, your fees, and in some cases, from the way those receivables are packaged into investment products. And that is why Capital One may treat two customers completely differently, even if they both have the exact same card. So when people talk about being bucketed with Capital One, this is part of what they're referring to. The bank is managing risk. They're deciding how much credit to give you based on how profitable they believe you are, how risky they believe you are, and how likely they think you are to repay what you borrowed. And once you understand that, at least for me, it became a lot easier to see why Capital One credit limits may feel capped. It's not always personal, but it's definitely not random. Now, finally, let's talk about how to increase your Capital One credit limit. Now, the reason why I broke all of this down for you is so that I can really explain that the only way that you can successfully increase your limit if you're bucketed is for you to actually get into a brand new Capital One card. Because again, the only way that you can successfully change your Capital One bucket tier is by having a different bucket tier. Your card is the best way for you to do that, and that usually means applying for a completely new Capital One card. Now, before we go any further, I want to talk about a product change because I know a lot of people will probably be in the comments and say, well, why don't I just do that? Why don't I just do a product change instead? Now, in most instances, if you take your current Capital One card and upgrade or switch it into another card, that doesn't necessarily remove the internal limit or restriction that's attached to your card. In most cases, or at least from what I've seen, the new card may still carry the same limiting factors because it's connected to the original account history. Now, before applying for any new Capital One card, you always want to use the pre-approval tool first. This lets you know what cards you may qualify for without impacting your credit score. Now, if Capital One only pre-approves you for a lower limit card or a card that's designed for fair credit, personally, I would just wait longer and start to improve your personal credit profile. Now, if you have negative items on your credit report, that doesn't mean that you're stuck. It just means that you need to clean up your profile before expecting a higher limit from Capital One or any other lender for that matter. That's why I recommend using Rising. Now, Rising is a platform that helps you understand exactly what's hurting your credit by giving you access to your credit reports and your scores. It also helps you take action with tools like custom dispute templates, bureau response tracking, and personalized credit game plans. On top of that, Rising also offers rent and utility reporting, which can help you build positive payment history over time, as well as backdating up to 2 years of payment history and adding that onto your credit report. Rising also includes score tracking, goal tracking, educational tools, and guidance on products like secured cards and credit builder loans, so that way you can start moving your profile in the right direction before applying for any other Capital One credit cards. So before you go after a high limit credit card, just make sure that your credit profile is in tip-top shape. And right now you can gain access to Rising for $1 with their 7-day trial. The link will be down in the description below. And with that being said, let's break down our strategy in the 4 steps. So for step number 1, the first thing you want to do is have good to excellent credit. Now, ideally, you want to have a 680 or higher credit score with no collections, no charge-offs, low utilization, and preferably fewer than 2 recent hard inquiries. Step number 2, or secondly, you want to ask for a credit limit increase on your other credit cards before applying for a new Capital One credit card. Now, if you did step 1 and you have good to excellent credit, other banks should be approving you for higher limits. And what happens is Capital One will view you as someone that's responsible or can manage more credit limit if the other banks also have given you a higher limit. Now, step number 3, or third, you want to use your card regularly but responsibly. Banks make more money from interchange fees every time you use your card. Now, that doesn't mean you need to max out your card or carry a balance. In fact, that can make you look risky. A better strategy is to use your card for regular transactions throughout the month and then pay it down to 10% or less of your available limit before your statement closes, so that way your reported utilization will stay low. In other words, let the bank see activity, but also let them see that you're responsible. And step number 4, or fourth, only apply for a Capital One card that falls into the good or excellent category. I just want to reiterate that because the main point is this. Before you apply for anything, you have to have the right credit profile. You need to increase your limits so that way it looks like other people are giving you high credit limits. You also want to make sure that you use that Capital One pre-approval tool. That way you kind of already know what's probably going to happen based off of what they're going to actually offer you. And if the offer doesn't look strong, wait until your credit profile improves and just try again. Now, those 4 steps were for people who are, let's say, in like the fair credit or the rebuilding phase. Those are the steps that I would take in order for you to apply for a brand new credit card. Now, if you are in, let's say, the good to excellent credit category and you have no derogatory marks, I want to actually show you some data points that can help you increase your Capital One credit limit. And this works with a brand new card too. So I just want to give you an idea about how you can like double your limit in 60 days, like we talked about in the beginning. Now, when you request a credit line increase, the way you answer the application questions really does matter. Now, banks are trying to figure out how much credit they should feel comfortable giving you, how risky you appear, and whether your current spending habits justify a higher limit. So let's break this down. When Capital One asks you for your employment status, you want to make sure that you answer honestly based on your actual situation. However, understand that traditional employment is often viewed as more stable than self-employment because the income can appear more predictable. If you're self-employed, that doesn't mean you cannot get approved for higher limits, but banks may look at your income differently because self-employed income can fluctuate from month to month. Now, the next question Capital One may ask is how much you expect to spend on this card each month. A good number to use as a guideline is around 30% of your available credit limit that you're requesting. The reason I like 30% is because it shows Capital One that you're actually going to use the card, but you're not planning on maxing the card out or depending too heavily on that card. So for example, if you're trying to get a $10,000 credit card limit, 30% of that would be $3,000 a month. So saying that you expect to spend around $3,000 per month on that credit card can make sense because it shows healthy usage without making you look overextended. Now, when Capital One asks for your maximum desired credit line, I usually recommend asking for about 20% more than the number you actually want. So if your real goal is, let's say, a $10,000 credit limit, I would suggest requesting $12,000. That way, if Capital One doesn't approve you for the full amount, they may still counter offer with the number you were originally aiming for. You want to make sure that you give yourself room to negotiate without making the request look completely unrealistic. Another important question Capital One may ask is, why are you requesting this increase? Now, one of the best options to choose if it fits your situation is that you expect higher expenses over the next few months. That tells Capital One that you're not just asking for more credit randomly, you're giving them a reason. So when you submit a Capital One credit limit increase request, you're going to see these types of questions. That tells Capital One you're not just asking for more credit randomly, there is rhyme or reason to exactly why you're doing this. So when you submit a Capital One credit limit increase request, you're going to see these types of questions. I put a little image on the side here. Make sure that your answers match your real financial situation, but also understand how the bank may interpret those answers. Now let's summarize the entire strategy from this video. If you currently have a Capital One card like the Platinum or the Quicksilver for rebuilding or fair credit, and you feel like your limit is capped, the first thing I would do is go to CapitalOne.com, check out their pre-approval tool, and see what they offer you. If Capital One pre-approves you for one of their strongest cards, such as the excellent version of the Quicksilver or the Venture 1 or the Venture or Venture X, then that would be a sign that Capital One now views you as a stronger borrower. Now, if you only get offers for, let's say, rebuilding cards or fair credit cards, again, check out rising.com. It can help you repair your credit and also boost your credit with their trade lines. Now, back to the good or excellent credit tier. If you actually see those offers, you can go ahead and accept that new card offer, and you will be able to consider this your first major credit limit increase because you'll receive a much higher starting limit than whatever your current credit card is with Capital One. Now, after you receive that new card, you can try requesting a credit limit increase on that new account. For example, if Capital One approves you for a $10,000 credit card like the Venture X, you want to try requesting another $10,000 in the first 30 days of receiving that card. If they approve it, great. Now, if you're denied, don't panic. Wait at least 31 days and then try again. Now, let's say 31 days after that, you request another $10,000 credit limit increase and you use the same criteria that we talked about right here. Now, if you're denied, wait another 31 days, try again. And you'll do this every 31 days until you reach your desired credit limit. And I recommend you doing this for credit cards in the good to excellent tier range. And the reason why I keep mentioning the Venture X is because it's part of the Visa Infinite series, which means the starting limit automatically is $10,000. It'll always be $10,000. So if you start with the Venture X, get your $10,000, then when you receive that card, activate it, request a new credit limit increase. Hopefully you get $20,000. 31 days after that, you request another $10,000 using the criteria that we talked about here. And then hopefully you'll get $30,000 within like a 60-day time frame. And if you're denied, no worries. Try again 31 days until you get the desired limit that you would like. I want to thank you guys so much for watching this video. Now, the stronger your profile looks, the better chances of getting approved for higher limit credit cards across the board. Now, if you currently have a Capital One card, drop your current credit limit in the comments, all right? I want to see that. I want to know exactly where you're starting from, and let me know if Capital One has been giving you some real increases or if you've been stuck at around like maybe $100 increase or just stuck at the same limit. Then use the pre-approval tool, right? Let me know what offers that you're getting and if you actually were able to get something like a venture card and if this strategy did work for increasing your credit limit. And if nothing else, if this video helped you understand why Capital One credit limits may not be moving for you, then please make sure that you subscribe to the channel because we talk about credit, business funding, personal finance, and strategies that can help you put yourself in a much stronger financial position. And as always, once again, thank you guys so much for watching this video, and you have a wonderful day.